Hello and welcome to Unleashed. I'm your host, Will Bachman, and I'm delighted to be here today with Ron Harpaz, who is the founder of Lettuce. And you can find them at lettuce.co. And they say, finally, an automated tax and accounting system for businesses of one. That's us, independent consultants. Ron, welcome to the show.
Thank you very much, Will. Thank you. Good to be here.
So on your website, you say if you're a business of one making over 100K, you could be overpaying your taxes by $10,000 or more. If you are a consultant, creator, coach, or professional services business, Lettuce is the only system you'll need to save. So talk to us about the kind of service. You have two levels, Lettuce Pro for $300 a month, Lettuce Premium for $700 a month. Tell me, what are the services that you offer? Is it accounting? Is it bookkeeping? Is it tax preparation? What does the product offer?
Perfect. So let's start with the fact that we are entirely focused on independent consultants. That's who we serve. That's, why we exist. And the main underlying understanding is that there is a growing population of independent professionals, consultants, executive coaches, marketers, data scientists, and they choose this way of living because they believe that it better serves, their profession and their lifestyle. And what happens is most of them are great at what they do and not as great at accounting, taxes, bookkeeping, and everything to go with that. So we are a FinTech software company that builds a solution to help take that off their plate. The idea would be we help those independent professionals incorporate their business, made the right S Corp election with the IRS. We open a business bank account for them. We run their bookkeeping. We run their accounting. We predict and file and pay their taxes. Everything done automatically through software, so that really what they need to do is bring in more clients and serve them well, and the back office should be handled automatically via software. And the reason we think this is so important, as you mentioned, people regularly overpay their taxes. And the reason is, if you are an independent consultant making, over 100K per year, and you're filing as a sole proprietor, as a, Schedule C, as the IRS call it on the annual tax return, you are double taxed as a sole prop, and you're not using the benefits of having a business. And that's exactly where we come in.
I'm sorry. You say that you are double taxed. I'm not sure if I understand why you would say that, because my understanding is whether you're filing as a sole proprietor or if you file as an LLC, a straight up, not an S Corp, but LLC, the income is not double taxed. If you file as a C Corp, it'd be double taxed. But if it's just a regular sole proprietor LLC, just whatever basically, profit your business makes, your revenue minus your costs, that is your income, and you're taxed on that. Why are you saying it's double taxed?
I love that question. So first of all, you're right. C corporations have business tax and then personal tax, which is a classic, area for optimization. But if we stay with sole props, the way the tax code works is that it's designed mainly for employee-employer structure. So normally what happens, an employee would have 7.65% of their taxes withheld for Social Security and Medicare taxes. And then the employer would contribute another 7.65% for those, for a total of 15.3% taxes on that income. Now, if you are a sole proprietor, with or without an LLC, for tax, it's the same thing, you pay the entire 15.3 on your entire income.
Not your entire income, it's just only up to a certain threshold, like it's up to 100,000 or something, and above that, you don't pay, right?
That is correct. The Social Security has a cap around 130, 140. It changes annually. You're correct. But you're paying that 15.3 on that amount. Now, the reason the IRS came up with the concept of an S Corp is that the entire system is designed, to more effectively monitor and tax corporations. So S Corp is a pass-through model where basically you can have a sole prop corporation that, would be passed through to your personal entity when you file your taxes. Why is that interesting? Because what the well-known prescription from the IRS on doing this right is to set up your S Corp, then have that S Corp pay a reasonable salary, reasonable compensation to you as the employee of that S Corp, then withhold Social Security, Medicare taxes, all of that on that reasonable salary, and the rest of the income is distributed as owner distribution, which is not subject to that extra Social Security and Medicare taxes. And, at $100,000, $200,000, that is a significant amount of saving each year.
Okay, so walk me through the calculation on that. Let's say that someone has an LLC, and today they're filing as an LLC, as a individual owner LLC, and their profit was exactly $200,000. So under their current system, they'd be paying 15.3% on the first, call it 130,000, right? Which is going to be, I don't know, 18 or 19,000 something. I can't do the math in my head, but 15% of 130,000. Let's call it 20,000, even though it's not exactly right. Under the S Corp, so let's say their total profit was 200,000. They're going to have to pay themselves a reasonable salary and pay 15% of that, and then the rest of it is something else. How would the calculation work? How much taxes would they pay under the S Corp election?
Yep. So first of all, you see, this is the fun part, right? If you have to do it yourself, you're now going into the beautiful world of tax calculators, caps, percentage points. Some of us, some of the audience listening to this, I'm sure love this. And some people don't love it and actually creates a bunch of anxiety for them. And what I've seen in so many interviews with people in this industry is they just pick a number, 20%, 25%, they put it aside, and then they talk about it in April with whoever makes their taxes, whether it's, on their own with TurboTax, or maybe they have their uncle's CPA who does the taxes for them. But this is a scary moment because you may have over withheld, under withheld, who knows? So the math itself, to answer your questions directly, and then I'll go from there, would be that if the business is making $200,000 in net income, you would pull out a reasonable compensation, reasonable salary from that. Let's say $80,000 to $100,000 is a reasonable salary for an employee in that business, and you're going to pay the 15.3% on that. So on 80,000, that would be some $12,000. The rest of the $120,000 that makes up the 200 would now be distributed from the business to the owner as an owner distribution that is not subject to Social Security and Medicare taxes, thus saving you $10,000, $15,000 a year. We can do the math separately. Now, the reason Lettuce exists as a software solution is to do this for you. And the main idea is to do this math every day on every dollar. Because if you think about it, all of us independent consultants know this, the income fluctuates throughout the year. Yeah, it may be 200,000 when everything is said and done, but there might be great months with a lot of income. There might be slow months. There might be more expenses, fewer expenses. So what you really want is an automated solution that has a bank account attached to it, that monitors every time you get paid, monitors every time the business makes a payment, calculates and withholds the right amount automatically every day of the year, and then keeps your balance to the IRS constantly at or close to zero. So there is no such thing as tax day. You don't sit down in April and say, oh my God, do I owe too much? Did I pay too much? What should I do? The whole thing has been done for you continuously with quarterly payments, with rebalancing, with prediction going forward. Does that make sense?
Yeah, I understand that. But just to close out the S Corp thing, at least the way I understand the way you described it to me is that the advantage or like the arbitrage is instead of paying 15% up to that maximum number of 130K, the benefit is you're saying, oh, well, my reasonable salary is something less than that. So maybe you argue that it should have been 100K as a reasonable salary or 80K or something. And so you're saving 15% on that difference. But if someone was, let's say, an independent consultant was, having profit of 400,000 or 500,000, and like a reasonable salary was 130,000 or more, there would be no arbitrage and no savings from the S Corp. Am I understanding that correctly?
Partially. So let me now go into more advanced tax strategies. The S Corp itself, the social and Medicare, are just one component of this. For example, once you have an S Corp, and you are now the employer of your individual, self as an employee, you can do things like retirement matching. You can have qualified business income deductions. You could have a better solution for healthcare premium payments. You now have a company and you're unlocking all the tax strategies that are typically available to corporations. One of the big ideas here is that the tax system and everything that works around it are very well optimized for corporations. Larger organizations have a finance department, an FP&A, and tax expert, etc. But the system itself allows you to take a lot of advantage of these benefits, even you have a business of one. So yes, the savings specifically on Social Security and Medicare may be capped, but there are many other things, retirement, healthcare, and other, that open up once you have an S Corp.
Okay. So could we go through those a little bit? So one, I mean, if you just have an LLC, someone can get an SEPIRA and they can put up to something like $58,000, $59,000 away into that tax-free. My understanding is that if you wanted to put more tax-free, you could get yourself a actually predefined benefit plan, but you need a what do they call it? An actuary, and to set it up, you can basically set up like a defined benefit plan, right? A defined benefit plan for yourself, and instead of a defined contribution plan, and then you could put up like, I don't know, 1/3 of your income or something, or some much larger number. Is that what you're referring to, or are you talking about something else when you talk about retirement advantages?
So that's a very good example. The difference between having a SEP IRA, as you mentioned, a defined benefit plan, or a 401k, solo 401k, opens up a number of limits that get higher and higher with the program that you choose. And for example, a SEP IRA, as you mentioned, has a cap. I think it's 20% of the income,
Yeah.
while an employer matching plan with a solo 401k has a higher cap that keeps going higher every year. So that's one example of where you could use retirement plans as a tax strategy to optimize your income. And one thing I want you to keep in mind is this now becomes a multi-variable optimization problem, because you may want to save more via retirement, depending on your age and preferences and plans. You may want to have more allocated to Social Security if you believe that that's how you're going to retire. Or you may have another reason where you want to optimize for salary, for owner distribution, you want to maximize expenses. There are things like business use of home and mileage. I think my point here is, while each and every one of these tax strategies is well known, the recipe is published, it's all available, you end up with a mishmash of do-it-yourself / ask your CPA solution. And what we're trying to say is that's not sustainable. Like, very few people are disciplined enough to go study all of this, then have the time to track and implement all of these, and then have the control to change those numbers where anything changes. And that's why, as somebody with software and technology background, I come to this saying this needs to be solved by a software product, not by humans. And in humans, by the way, I include you doing it yourself, but also relying on CPA or offshore teams, etc. Humans get tired, they make mistakes, they leave, and you have to replace them. The knowledge is not sustainable. There is something about putting these very well-known tax codes into a piece of software and saying, optimize this for me.
All right. So let's talk about what Lettuce does. First question is it a replacement for a QuickBooks accounting bookkeeping package. So does someone, I mean, do you have basically replicate what QuickBooks does if someone wants to track all their expenses and so forth?
Yes, it is a replacement. The idea is that rather than having multiple software solution, QuickBooks, Excel sheets, TurboTax, um, you would have one single solution from Lettuce. We take you all the way from incorporating your LLC, making the S Corp election, running your books. We open a bank account for you. You know, we hear from a lot of customers who actually have a commingled bank account. Their business income and expense, their personal income and expense are all in one bank account, which is not a best practice, not recommended, and opens you up, you know, to IRS audit and questions. So we bring all of that to you. The business bank account is a dedicated one. The accounting software tracks every transaction. There is a tax prediction engine that tells you where you stand every day. You don't need all of those other software solutions. We take care of that for you. We also include payroll processing. So once you decide with the system's recommendation what's your reasonable compensation, our system would run payroll for you and make sure that you get paid, that the federal government gets your taxes, that the state government gets all of the pieces of that reasonable compensation that needs to be done. Things that are rather complicated to do on your own, we do all of that.
Yeah. Now, can you also, let's say that someone is not, let's say they start as a solo practitioner and they end up, hiring someone. Will you guys, will your product also do payroll for a employee number two, or is it just they only do payroll just for the owner?
Right. So technically speaking, we are able to do it for the extra employee. We see very often that extra employee is a spouse or sometimes a kid in the business. So we support that. But I would say that our focus is primarily on business of one.
Yeah.
We see that most of our customers showing up are people who have a business of one, they run it, they are the essence of the business. That's who we want to serve the most.
Yeah. When you get the free business bank account, is that with one of the large banks, or is that a bank account like just with Lettuce? Like what's the bank behind it?
Yeah, so we have partnered with a FinTech company called Unit that allows us to build, modern banking. The underlying bank service itself comes from Transpecus Bank, which is a Texas bank, FDIC insured. They are providing the actual infrastructure, keeping your money safe.
So the account is FDI insured?
Yes, absolutely.
Okay. Up to the 250 cap or whatever.
Correct. Up to the $250,000 FDIC insured. And we are working, by the way, on a program probably going to launch later this year that allows you to sweep into multiple accounts and then get the FDIC insurance to go even higher, which is pretty common these days with a number of fintech companies. We're on it.
Oh, that's smart. There was a few bank issues last year where a lot of people probably would have liked to have that in place for their peace of mind.
Yep, that's a trend that's happening right now.
Silicon Valley Bank, First Republic, etc. Okay. So your Lettuce has the accounting and bookkeeping software that you need. It has the if you're putting solutions together, you'd have to get a payroll solution like Gusto, and you guys have that in your product. And you'll also help with sort of automating or telling the person what they have to do for their estimated quarterly taxes, which is a requirement for people. So you'll calculate those and sort of just automatically deduct that from the business account and pay those taxes, I guess.
That is correct. Think about those quarterly taxes as a combination of, prediction to make sure that you're constantly withholding the right amount, then the actual filing and ultimately making the payment. We take care of all of those.
How do you handle stuff that gets a little bit more complicated than can be easily done, where let's say someone has multiple jurisdictions, or because the nexus issues, they've worked in multiple states, or I have some income from Canada because I did a project up there, or when things might get a little bit more complicated and they need to talk with a human. Talk to me about that a little bit.
Yeah, so that's exactly where we have the distinction between the Let Us Pro program and the Let Us Premium program. We have partnered with a company that has CPAs, and what they do is they serve this exact market segment. And when our customers need extra services, we handle everything that is automated and repeatable and works, according to the prescribed system. And they help us augment the service when you need something special. So some people have offshore investments, some people have rollovers from all kinds of K1 investments they've done in the past. That's why we partnered and serve those customers with real CPAs.
That's very cool. About how many users do you have right now?
We've just launched January 1st, and in the last, I would say, 8 weeks, we got over 100 customers. So we're very excited about the growth. Very early stages, of course, but growing rapidly.
Nice. So far, what are your typical customer profiles? Like, are these folks that are, sort of freelancers earning 80K a year? Are they, independent people earning like $1 million a year? What sort of level are you targeting? Really, what do you think is sort of if you had to define one profile as the ideal profile for Lettuce, what's that look like?
Yeah, the ideal customer profile for us is an independent professional services consultant, management consultant, marketing executive, executive coach, therapist, making somewhere between 150K to 500K. That's probably the sweet spot where there is enough in the business to make it worth your while, and there is enough tax strategies to unlock. Those are the people we see right now, showing up at our door interested in our services. It's more the people who have a business, they've been doing it for a few years, they know they're good at it, they know that they want to stay independent, and they want somebody to take the financial stack off their plate. That's our sweet spot.
Very nice. That's cool. What else about the product should people know that we haven't covered so far?
Well, we covered a lot. I would say people should know that we are working to roll out an AI accountant. I know it sounds very common these days to have a chatbot for everything, but we took a different approach. We want to make sure that every question our customers are asking can be answered 24/7. So we are training and fine-tuning an AI engine on specifically this area of the tax code with a lot of annotations and Q&A, etc., so that they can get answers without hallucinations, without going to YouTube videos, without getting random Redditors input into that. We are curating that training set so that the AI answers you get are as good as human, but much, much faster. So we're going to roll that out in the next couple of months, and we expect it to have a lot of great feedback. We're hearing people want guidance, they want to know more, and picking up the phone and asking a CPA is not within reach for most people. So we're excited about that.
That is fantastic. Ron, I will just mention here that the URL is lettuce.co. So for listeners who are interested to check it out. Ron, thank you so much for being on the show today. This was very helpful.
Thank you for having me. Really enjoyed the conversation, Will.